Hey, what's going on, everybody? Welcome to Bonafide Investing, where we talk all things high yield investing, options, investment goals, ideas, and what have you. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, I took about 20% of my net worth. I have built what I call a all-weather high yield portfolio using high yield ETFs as well as options to pay my bills and maintain and pay down my margin. I've been doing this experiment for about 2 years, and I've narrowed it down to some of my favorite ETFs at this point. Everything we discuss is not investment advice, not now, not ever. So please do your own research and due diligence before making any investment decisions of your own. Even though I was once a financial advisor, I'm not responsible for your wins. I'm not responsible for your losses. So I hope you all had a good week. I want to give a portfolio update, talk about a lot of the changes I made, did a rebalance. So I did my quarterly rebalance this week. We'll discuss that. Some of my thoughts on where markets are headed and just my views on the week. So if we dive in, I wanted to give you guys some updated stats on Cash Flow Life. Again, my margin buffer sitting where I want it, above 50%, and it has now been above 60% for almost all of 2026. Sitting at 61.52%. From this rebalance, I was able to bring down my margin under 150,000, which where I think markets are headed right now, I am extremely comfortable with. Right now, I am using 25.15% of my available margin and 74.85% of my equity. The portfolio total value as of today is $596,012. That came down a little bit. The total annualized income from Cash Flow Life is $191,328.25 based on the latest distributions and the latest shareholdings. That is a total monthly income of $15,944.02. And the overall yield is 32.1%. So a little bit higher, a little bit on the higher side. Whenever I get above 30%, I got to really be mindful of NAV erosion. And that is because, again, I upped my long short position of ULTY and SLTY here a little bit. I sold out of CRF. Okay. So I got rid of CRF. Robinhood is not dripping CRF at the NAV on the reinvestment program. So I bought CRF and CLM. I should say I actually added to them in an outside brokerage that does drip. So I'm not going to hold that anymore in Robinhood. There's really no point, I don't think, in Cash Flow Life to hold that fund any longer. If Robinhood changes their drip, their reinvestment to NAV for them, I might re-explore it. But right now, it didn't make a lot of sense. I also sold out of XOMO earlier in the week. I saw oil, though it was soaring, Exxon was stalling out. So I sold it, I think, Tuesday morning for a nice gain. Took a couple distributions as well. So right now, I don't have much to any oil exposure. I think oil is getting way stretched here. It's becoming more of an emotional trade at this point. I think what I might do is even buy a put on USO this coming week. Might go a little short on oil. I also sold out of IGLD. I sold out of that earlier in the week as well. I sold out on the ex-div day. I wanted to get that distribution. Distribution came down a little bit. It was still around that 20% mark, which was nice. But I do think IGLD's distribution will come back in. And I'll be honest, I wanted to trim gold. Right now, I was very overweight gold just throughout all of my net worth and wanted to trim some gold holdings. Yes, it is my favorite investment, but just because it's my favorite investment doesn't mean, when it comes to rebalancing, that I'm not strategic with it, and still adhere to my own rebalancing rules. So sold out of IGLD, bought more IYRI to bring those, back up closer to 5% total. I wanted to increase the real estate. No changes with YQQQ. I still am in the camp that we are long overdue for a correction, if not a generational crash. So whether that crash has started already or that correction has started already, nobody knows. And please ignore people who say they know. But you have to have an opinion on the markets based on math, based on charts and logic, and you got to use your brain, right? You got to use your conviction at the end of the day. You can't just sit back and become complacent. And I think this market has become extremely, extremely complacent, which in my opinion is very, very dangerous. So again, got another good distribution from YQQQ. Week recap on performance for the markets. The S&P 500 was down almost 2% for the week. NASDAQ was down about 1.5%. Gold got a whip in. It was down about 3% for the week. Again, I tell you guys, I don't really adhere to performance in Robinhood because they don't take into account your distributions. But for the week, supposedly we were down about 1%. I don't know, right? I take that, like I said, with a grain of salt. It's probably close, but it's not exactly accurate because, again, distributions are not accounted for. So to give you the current breakdown from this rebalancing, and again, my recurring investments, some of the changes here, I did increase TLTW. Even though I only have TLTW as at about an 11% allocation, I would like to have it at 15% soon. I just have a high allocation in YQQQ right now. I'd rather be short. TLTW did pay this week. It's about a 10.6% annualized distribution. I'm fine with it. I think that's great. That outpaces inflation, supposed inflation, at least. And it's really been a very stable ETF. Okay. So even with rates coming back up, because I think we're going into this stagflationary environment, where I think we're going to see some inflation in some areas we don't want to see inflation. And I think we're going to see some deflation in some areas that we don't want to see deflation. And like I've said in the past, that's the worst spot you want to be as an investor, just trying to live day to day and pay your bills, right? And keep your standard of living. So again, I think it's going to take a lot of active management, a lot of strategic, tactical maneuvering in these markets over the next decade, if not longer. I think we're going to see a very different next 10, 20, 30 years in the last 10, 20, 30 years. So again, changed some of these recurring. I'm still at $200 per day, but I did double back into the indices on Monday. I think it was Monday. I bought some gold. Gold got hammered on Monday. I added to the gold positions, GLDY, IAU, and yesterday I added to IYRI. It was down over 1%, and I added back into QDTE all the way through RDTE Monday, Thursday, Friday. So I did double for an extra $600 invested back into the strategy. Okay. And you can see that I sold a lot of my calls and puts. So far for March, and we're only about a week in, I've already made $1,933 of option income from my options. I've taken very low risk, using leverage, using very small amounts of cash and margin to generate that extra almost $2,000 in the first week of March. So I'm happy about that. So wanted to give also the breakdown now of how each of the sectors, pieces of this portfolio currently sit. So for the short ETFs, the salty, the YQQQ, we're currently at 25.7% of this allocation of Cash for Life portfolio. The long, the indices, the NASDAQ, S&P 500, and Russell, we are sitting at 30.1%. For the fixed income portion for TLTW, that came up to 8.8%. Gold, real estate right now, any other commodities I might have came down to 23%. And then the options value is sitting around 4% and the high yield about 7%. So these numbers did change, right? They have changed some. The overall yield, again, like I said, did go up. But for the month of January of this year, we generated $15,139.70 of total income between the high yield ETFs as well as options income. And for February, we generated $16,791.41. So I liked to see that higher than January for a shortened month. That was nice. So we've generated already $31,931.11 in the first 2 months of 2026. So overall, very happy with where Cash for Life is at, what it's doing. So again, some of my new target allocations for the portfolio. Once things, I think, markets kind of, the volatility dies down a little bit and I start exiting a little bit of my YQQQ, I do want to bring that down to about 15% from about the roughly 20% it's at. IYRI, I want to target 5%. QQQI, I want to target 5%. QLDY, I want to target 10%. I've really liked QLDY, what it's doing. Keeping that very consistent 40% distribution twice per week. GLDY, I want to target 10%. TLTW, I want to get a target of 15%. XDTE, 5%. SPYI, 5%. IAUI, 5%. QDTE, 5%. RDTE, I want to target 5% there. GDXY, 5%. And then Ulti and Salty, I want to target 5%, but I'm a little bit overweight with them right now as I want to generate just really high income from those to put it back into the strategy while markets are falling. Okay. And I'm using a lot of days to double my dollar cost average for the big down days. So again, you can see the share count differences here, what's been changed, what's different. Overall, happy with the rebalance. Again, I think I brought everything back into the targets where I wanted them. Kind of cleaned up cash flow life with fewer holdings. I'll be doing some research on some companies as well as maybe some sectors to look at the potential call and puts for the coming week. But I think we're headed down. I really do. I think that we could see the NASDAQ fall down as low as 18 to 20,000 potentially. And I think we could see the S&P fall down to 6,000, if not possibly lower. We will see. I think it'll be a healthy move if it happens. Okay. And as much as we don't like corrections and to see our net worths go down, it's important, right? To keep markets healthy and moving, in a healthy direction. We want to see those sell-offs, right? Is this a move of a bigger crash? I don't think so. There's still so much fear in the market and so much has been priced in from this Iran invasion, this war, whatever we're in, and who knows what's going to happen with that. But I would say unless, God forbid, nukes start flying, I don't think that we're going to be having that generational crash. I think it's coming, but I think it's going to come like a thief in the night when there's just so much greed, so much complacency, and everybody has accepted the new all-time highs as the new norm. I think that's when we're going to finally get that collapse. When? Who knows? I don't know. I'm sure you don't have a crystal ball either. And please don't listen to anybody who thinks they know. My favorites are the people who will tell you what will happen in Q2, and then they'll tell you what will happen in Q3, and then they'll tell you that it'll go another direction in Q4. I just have to say, yikes. Stay away, please, from those people. So again, wanted to just give an update on the portfolio, kind of what I think is going to happen this week. I think Monday we're probably going to open down unless we get some news, which if we did, would probably come out Sunday night, like always, that there's a ceasefire or there's negotiations or there's hopefully peace. But we shall see, right? Forgot to mention also SLV. That's just hedging another outside position I have. That is just insurance. I'm not trying to make money on the SLV put, but it's more of my sleep well at night that if silver does come down, which I think it may, that I'm just hedging another position. So again, guys, trust God always. I would say with what's going on in the world now is an even bigger time, more important time to stay close to him. Ignore the noise. There's so much just emotional nonsense out there and somebody who thinks they know what's going to happen and all this. Just be careful, right? Use your own logic and common sense. And again, control for risk first and foremost, then return. Okay. Every day I look at cash for life. I look at it and say, okay, how much can I lose before how much can I gain? Okay. That's the most important thing because I want this to be sustainable cash flow for my life. I want to continue to not to have a boss, to spend time with my kids, to do my hobbies, to travel, to do what I want to do. If I, kind of get emotional and get away from those principles, right? That conviction overall, I think the portfolio is going to have problems, right? So again, what is success to me with cash flow life? If it is this exact same balance in 10 years, That is success to me. I've paid my bills for 10 years and the portfolio has not gone down much, if at all, right? That's success for this portfolio itself. I've got my growth stuff. I've got my outside assets that I have different strategies, different things to do with different goals in mind as I get older. But for right now, Cash for Life has been doing the job that I've constructed it to do, which is nice. So hope you guys got something from today's video. Have a good day.